Understanding Business Taxation, A Beginner's Guide. Understanding Business Taxation, A Beginner's Guide. Introduction. Taxes are an integral part of every business. However, navigating the world of business taxation can be a complex and overwhelming task, especially for beginners. 1. Types of business taxes. Businesses are subject to various types of taxes, depending on their structure and nature of operations. The most common types of business taxes include income tax. Every business entity is required to pay income tax on its profits. The tax rate typically depends on the business structure, with different rates for sole proprietorships, partnerships, and corporations. B. Self-employment tax. For individuals who are self-employed, such as freelancers or sole proprietors, self-employment tax is applicable. This tax covers Social Security and Medicare contributions. C. Employment taxes. If a business has employees, it must withhold certain taxes from their wages, including federal income tax, Social Security tax, and Medicare tax. The business is also responsible for paying the employer's portion of Social Security and Medicare taxes. D. Sales tax. Many businesses are required to collect and remit sales tax on the products or services they sell. The rate of sales tax varies depending on the jurisdiction and the type of goods or services being sold. E. Property tax. Business entities that own real estate or personal property, such as equipment or vehicles, may be subject to property tax. The amount of property tax owed is based on the assessed value of the property. F. Excise tax. Certain business activities, such as manufacturing or selling alcohol, tobacco, or gasoline, may be subject to excise taxes. These taxes are often included in the sale price of the relevant products. 2. Understanding tax obligations. To fulfill their tax obligations, businesses must follow certain guidelines and meet specific deadlines. Here are some key considerations. Employer Identification Number, EIN. Most businesses are required to obtain an EIN from the Internal Revenue Service, IRS. This unique identifier is used for tax purposes, such as filing tax returns and paying employment taxes. Estimated tax payments. Business owners may need to make quarterly estimated tax payments throughout the year to cover their income tax liabilities. These payments are based on the projected income and tax liability for the year. C. Record keeping. Maintaining accurate and organized financial records is crucial for businesses. This includes records of income, expenses, invoices, receipts, and other relevant documents. Proper record keeping ensures compliance with tax regulations and simplifies the tax filing process. D. Filing tax returns. The method of filing tax returns depends on the business structure. Sole proprietors and single-member LLCs typically file a Schedule C as part of their personal tax return. Partnerships and multi-member LLCs file a partnership return, Form 1065. Corporations file a separate corporate tax return, Form 1120. E. Reporting employment taxes. Businesses with employees must regularly report and deposit employment taxes. This typically involves submitting Form 941 on a quarterly basis, which details the wages paid, taxes withheld, and employer contributions. F. Sales tax reporting. Businesses that collect sales tax must file regular sales tax returns with the appropriate state or local tax authority. These returns outline the sales made and the amount of sales tax collected. 3. Tax deductions and credits. One of the key advantages of understanding business taxation is the opportunity to claim deductions and credits, which can reduce the overall tax liability. Here are some common deductions and credits available to businesses. Business expenses. Ordinary and necessary business expenses can generally be deducted from taxable income. This includes costs such as rent, utilities, salaries, advertising, and office supplies. Home office deduction. If a portion of a home is used exclusively for business purposes, a business owner may be eligible for a home office deduction. This deduction allows for the allocation of certain home-related expenses, such as mortgage interest, property taxes, and utilities. C. Depreciation. Businesses can recover the cost of certain assets, such as machinery or vehicles, through depreciation deductions. This deduction allows for the allocation of the asset's cost over its useful life. D. Research and development, R&D, tax credit. The R&D tax credit provides an incentive to businesses engaged in qualified research activities. This credit can help offset the costs associated with innovation and product development. E. Work opportunity tax credit. This credit is available to businesses that hire individuals from certain target groups, such as veterans, ex-felons, or individuals receiving government assistance. The credit provides a financial incentive to promote employment opportunities for these individuals. 4. The importance of tax planning. Effective tax planning is a crucial aspect of managing business taxation. By strategically organizing finances and transactions, businesses can minimize their tax liability and optimize their cash flow. Here are some key considerations for effective tax planning. Timing income and expenses. Businesses can manage their taxable income by carefully timing the recognition of income and the payment of expenses. By delaying income or accelerating expenses, businesses can reduce the current year's taxable income and defer their tax liability. Choosing the right business structure. The choice of business structure has significant tax implications. For example, establishing a business as a sole proprietorship or a pass-through entity such as an LLC can provide tax advantages, as the business income is taxed at the individual owner's tax rate. On the other hand, setting up a corporation can allow for certain deductions and can provide opportunities for tax planning. C. Maximizing retirement contributions. Business owners can contribute to retirement plans and take advantage of the associated tax benefits. Contributions to retirement plans, such as a simplified employee pension, SEP, IRA, or a solo 401k, are tax deductible and can help reduce taxable income. D. Utilizing tax credits. Businesses should explore available tax credits that can help offset their tax liability. These credits can include energy-related credits, hiring credits, research and development credits, or credits for investing in certain economic development areas. E. Implementing tax-free employee benefits. Offering tax-free employee benefits can be advantageous for both businesses and employees. Benefits such as health insurance, retirement plans, and educational assistance can be provided on a tax-free basis, reducing the overall tax burden for both parties. 5. Staying compliant with tax laws and changes. Keeping up with tax laws and changes is essential to ensure compliance and avoid penalties. Tax laws can undergo revisions, and new regulations may be introduced. Here are some strategies for staying compliant. Regularly monitor tax news and updates. Business owners should stay informed about changes in tax laws, rates, and reporting requirements. Following reputable sources of tax news, consulting tax professionals, and participating in relevant industry forums can help stay updated. Engage a tax professional or accountant. Seeking advice from qualified tax professionals or accountants can provide valuable insights and guidance. These professionals can assist with tax planning, identifying deductions and credits, and ensuring accurate tax filings. C. Keep detailed records. Accurate record keeping is vital for tax compliance.